Three, two, one, and I should be live now. Hello, everyone. This is Rick Ray from rickrayfx.com, and I just wanted to take a minute to make an instructional video. I haven't done one of these in a long, long time, but I just saw a really classic formation here on gold, and I wanted to share it with everyone. As you know, gold has been bullish for the last couple of months, and sometimes, of course, it will retrace before it starts another upwards move. And that's what it's done tonight, and I wanted to just share with you what I have seen here with the candlestick formations and the T-line strategy that I learned from Stephen Bigelow, and the opportunity that you could have taken. Normally I advise people against taking a counter trend trade. Okay, you know, the trend is bullish, so look for an opportunity to buy. But sometimes there is just, you know, when everything comes together, it's almost obvious that there is a good opportunity for a counter trend trade. And counter trend trades are generally risky because we don't know how far they will go. All right, the trend is your friend. If the trend is bullish, then look for an opportunity to buy. Don't trade against the trend. But this is the counter trend trade that I want to show you here, and what we're looking at is gold, XAU USD on the 15-minute chart, and what we have is a classic tweezer top candlestick formation. And we also have another indicator which you might not be familiar with. I give it to my students, called the Knoxville divergence indicator from Mr. Rob Booker. He designed and developed this. And you got Knoxville divergence 1 here, the first red line, but it continued to move up and sideways for a while. Then you got the second Knoxville divergence, okay, and then you had the tweezer top candlestick formations, and tweezer top candlestick formations is usually a sign of a change in sentiment and perhaps a reversal. And they happened right at R1, resistance level 1. So sure enough, on the 15-minute chart, the candlestick started to move down, and it crossed below our T-line that I call it here, the 8 EMA. And when that candle closes below the 8 EMA, then you take your trade, your short trade, on the next candle, where I have the check mark there. You sell right there, okay, and go short. And you know where it's going to go. It's going to go down to the next level, which is the pivot point for the day. And it's, you know, this is live real-time action, so it's probably going to get there before the next half hour or so. And if you'd have taken the trade right there, and let's say it goes all the way down to the pivot point, that would be 50 pips. Not bad for a couple of hours trading. That's excellent. This beautiful formation here. And you say, well, okay, that's a 15-minute chart. You look on the 5-minute chart, you still have the tweezer top. It's a classic formation. And if you look on the 5-minute chart, you could have actually taken the trade earlier, maybe just when this candle closed below the T line, the 8 EMA, and then you would have got in there, and you would have got even more. Let's see, where's that pivot? There it is. Okay, and if you got in on that candle and go down to the pivot, that's 65 pips. Okay, so going to the shorter time frame gives you a chance to get in a little bit earlier. Even if you had waited to here till it was definitely closed below the T line, there was no question about it, then that would have still given you a good run down to 54 pips. Okay, and you look on the 30-minute chart, it's still a tweezer top. That is a classic candle formation. You go to the H1 and it's a tweezer top. This is just, you don't get formations like that very often that work out just perfectly. That's why I wanted to share it with everyone. So of course you put your stop loss below where you enter your short, and then you could gradually move your stop loss down. And it's, you know, it's just doing a bit of a retrace now, but it's probably going to go down and touch the pivot point before it continues its bullish run. So watch for those things. Okay, all you got to do is scan from your chart and watch for the classic candlestick formation. It's one of my favorite. I like the doji. Then there's the tweezer top. There's the bullish harami, bearish harami. There's a few others, a few major candlesticks that it's easy to spot when they form. And when they do, It's a good indication that something is about to happen. And the tweezer top is a good indication of a likely reversal. Okay, and if you want to, of course, you can always compare the stochastic as well, because as this started to turn bearish, we looked down at the stochastic and the green line has crossed the red line and it was headed down, and that's the same thing on the 30-minute. It has crossed the line here already and still has room to go down, so now it's getting down to the oversold area, so it might have run out of steam. This is bullish, remember, we don't know how far it will go down. It's a counter trend trade, so it's not likely to go very far. That's why I don't like to take counter trend trades. I like to go with the trend, look for an opportunity to buy. So as this is starting to turn around, it might be a good opportunity to now go long, but I would wait for this to go above the 8 EMA and maybe look for some other type candlestick formation before I would go long on this tonight. Okay, I hope that helps you a little bit, points out what you can look for. If you're trading gold, it works on any currency pair. Okay, it doesn't matter what you're trading. I like trading gold because Fullerton Markets gives us the best spread on gold of any broker I've ever seen or heard of. Right now, the spread is fluctuating between 1.5, there's 1.3, 1.4, 1.5, less than 2 pips. So it's really a very, very small spread, so a very small broker fee that you pay when you make the trade. Okay, thanks for watching this. I appreciate it. If you like this video and you want to hear more, just leave a comment below this one. And of course, please subscribe to the YouTube channel and share with your friends. Thanks for watching. Take care. Have a great week. Bye-bye.